Hey, what's going on, everyone? My name's Andy. My channel's Finding Value. Today, we're going to go through Twitter, see what people are talking about on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: finance, commodities, and/or wealth building. So let's dive in there. Let's see what people are talking about, and I'll share my opinions. At Fighting_Finance, if you want to follow me on Twitter, and if you want to join our community, finding-value.com. That's where I go into individual companies, sectors. I do trainings on technical analysis, ratios, and market conditions. This weekend, I'm going over precious metals and the fundamental setup in terms of supply demand imbalances that we're seeing. Going over some supply. I'm also going to include some platinum and palladium information as well. So the Great Marquee, Bitcoin, BTC, Livermore speculative chart looks about right, and this is what he's got for it. So let me zoom in there. There we go. So we've got a downtrend. So 1, 2, 3, 4, 5, 6, 7. This is 8. And then we've got 9, 10, 11, 12, 13, 14. And that's probably the likely case. I agree with what he's got here. Um, he's got this pretty nailed pretty good here for the Livermore accumulation cylinder and the move for nailing this down. I really like charts like this. Looks very clear. And on some of this, we have some of the charts that I think are over here in commodities right now on a longer time frame, longer time frames. Adobe. So Adobe ADBE with a massive drop right through its 200-day moving average. So I want to, I'm looking at some of these tech companies because I do think that they are close to topping and or are topping, depending on what you're looking at. Nvidia is close to topping while other ones are struggling, like Adobe here. How could we know beforehand this drop could occur? Generally, you'll see a lot of selling pressure right before it, like this, and that is usually not a good thing. Then it goes sideways, and then you can see another drop behind it. So people, insiders knew that something was wrong, and you get these big selling distribution candlesticks. Someone was basically offloading a bunch of shares. And then the result was this coming on down. But that is one of the things that you can look for, not the only thing. You can also look at other companies within the sector to see if they're pulling on back, like Google and Meta and Amazon, whatever else people look at. And if they're pulling back and you get distribution candlesticks all at the same time, that's the alignment I look for. That's when you could see a potential sell-off or a topping pattern even. This could be a top. Bar charts. Investors are ignoring the risks of stagflation by investing record amounts of money into the stock market, warns Bank of America. The B of A says record rush to U.S. stocks ignores stagflation risk. Investors pour over 56 billion into U.S. equities led by tech. Inflation still high globally and labor market cracking. B of A. So yeah, we could be at a top for technology, and people are still pouring a bunch of money into the market. Is that a problem? It will be if we get a really big pullback. Now, I don't try to time the short-term stuff. So if these guys are long-term investors, maybe it won't impact them. I think it will. I don't, I mean, if we get what I think is coming, I think technology stocks are probably going to peak here at some point. They're going to roll over, and I don't know if they're going to break that peak again in like 10 or 15 years. I think we're going to trade sideways for a very long period of time, and I think that their earnings over that time frame will catch up to the valuations that they've got today. They're vastly overvalued, and I think it will take some time for all this to kind of work its way on out. Could we get a recession out of this? We could. It's possible, but the shortages are all over in commodities. And when you get shortages as large as what I think we've got in energy, You could say uranium, you could say oil, potentially natural gas a few years out, and then you could look at some of these other ones like copper and nickel and a bunch of others, aluminum. Uh, they go into massive deficits in a few years. So that's not going to be great for growth and for regular companies where they're converting commodities into usable products. You're going to see their input costs go way up. So you're going to see the PPI, the producer price index, go up at a faster pace than the consumer price index. And when you get that mismatch, that is an inflationary period where prices go up. Generally, interest rates go up with it. And then you're going to see precious metals, I think, do very well. You're going to see higher interest rates potentially, which is most likely the case in my opinion. And those higher interest rates are going to revalue the stock market with future earnings. A lot of those big growth stocks will be revalued lower. It will be a crash, so to speak. Rashad, he says, gold to silver ratio finally doing something. The ratio breaking down of the lower band of an 8-month channel. If so, this should finally propel silver higher. Well, I don't think the ratio is going to propel silver higher, but the ratio breaking down is one of the reasons that silver is going up faster than gold. Is the ratio is going down. That is the outcome of that. I do think that silver is about to break. I think we're going to see a monster run in silver. Some people think that the ratio could get down to as low as 15 to 1 or lower even. Do I believe that? I have no idea. All I know is that we have a 50-year pattern, up and handle pattern. We are breaking about a 13, 14 year, what is it? 2008, 15-year-ish, whatever it is, downtrend line that is breaking to the upside. So, I mean, if I were to choose a setup, I'd say, yeah, it's probably going to do some crazy thing here. There isn't this type of setup that we've got. It could be, and I said could, be the most explosive move of any asset in history under the shortest period of time. Because silver really does crazy things in very short periods of time when it does break. You can look at history. Late 1970s, it really rocketed during that time frame in a very short period of time. It did that as well in '08 to 2011. And I think that the setup is here where we're breaking the ratio to the downside and we're breaking that long-term downtrend line, which I think will activate the bigger pattern, which then it's like, wow, we could get a really big move to the upside, a really big move. EV is just not scaling like everyone thought it would. The big three are losing billions and backing away from the market. The infrastructure just isn't there yet to make these cars practical for electric vehicles. So it says the EV euphoria is dead. Automakers are scaling back or delaying their electric vehicle plans. Um, it says though consumers' demand for EVs hasn't shown up in the way executives had expected, sales of the vehicles are still predicted to increase in the years to come. Just an FYI. So I would buy an EV vehicle if it was cheap and very easy to use, convenient. But I couldn't even tell you where the charge. I know where one charging station is that is somewhat close to my house. I would have to install a charging, outlet in my house if I were to charge EVs. But I drive so little right now that buying a vehicle just because it's electric would be not a smart move. So even if gas was very expensive, I don't drive enough to really justify spending any money on a car at this time. Scrolling down, Sahara, URNM, uranium. It says if it holds the lower band, it will bring into view the upper band as a target. And this is what he's got here is basically a support level that we're at. Are we going to break to the upside here, or are we going to break down with a bigger, larger corrective move? If I were to take a guess, I would say that it is possible that we could go and break down into a larger corrective move. What do I base that off of? I'm only basing that off of what the technology stocks are doing at this time. And we could see a bigger pullback in technology, which could pull back uranium. Now, if we don't get a pullback in technology stocks and it just goes sideways, maybe uranium moves on up. But I have seen the correlation between uranium and some of the technology stocks, and it's been somewhat strong. And technology is looking a little bit weak. We also, when I look at this chart, we do have some larger candlesticks in here that tells me there's still some sellers there. So I know this could move and change and turn up on a dime. That's why I am not selling out of my uranium holdings at all. I'm not trying to time this. But just because I'm not trying to time it doesn't mean that if this were to get a large pullback, I would love to buy more. If we get a large enough pullback, I could see myself buying some of my favorite companies again. But at this time, I'm just waiting and watching. I'm trying to remain neutral and say, you know what, I know there's some downside momentum here, but let's make sure we start moving to the upside before anything. But again, I'm not really going to add, I don't think, anything if we don't pull back the levels that are down here. Break wave. So iron ore inventories in Chinese ports continue to march higher, breaking above 140 metric tons, and now stand firmly above the 5-year average. So that inventory level in iron ore has changed quite dramatically, quite quickly. And you could still see a little bit of weakness in some of the diversified mining companies. With copper breaking to the upside, the companies that are more copper focused are going to do better than maybe some of the big diversified mining companies that are more heavily exposed to iron ore. I mean, just an FYI. And this could also impact some of the dry bulk shipping rates. Silver breakout is happening. It's truly just a matter of days or weeks at this point. We have gold that's broken to the upside, and I've been watching silver here. Silver is a beast when it moves. It moves fast, and it doesn't have a ton of pullbacks. I watched that move from '08 to 2011, and it was awesome. Now, if we get a big move to the upside and we start, we close this year above 30, $32, which I think is possible, we could engage the big cup and handle pattern, the 50-year cup and handle pattern. And I don't know how fast that will move, but we could really move up. So I do like, a healthy dose of silver in the portfolio, just in case that does happen. Ronnie, it says, oil breaks out of range-bound trade. WTI futures have surpassed the $80 psychological level. We can see the break to the upside there. I love, charts like this. Simple, nice little resistance level, and it's breaking to the upside. Plus, it's oil. I love oil. So, iron ore versus Cape-sized rates the last 10 years, you can see how correlated they are. There are times where they do break apart to some degree. It doesn't go down as much. And then there's times where they are highly, highly correlated. Iron ore, the 50-day moving average coming here, and this is your Cape size rates in the lighter line there. And you can see it's just basically delayed to some degree. It's shifted to the right just a little bit. Trend Spider, Oxy, if energy stocks keep ripping, this monthly setup from Occidental should not be overlooked. Doesn't hurt that Buffett has been loading the boat either. So Oxy's looking really good. There are other companies that have this same exact fractal that would blow Oxy out of the water that are mid-cap companies. Those are the ones that I'm invested in. Ones that they've gone from this bottom here to the top have gone up over 30x, 30 times your money in a 2.5 year time frame. And then I believe that the next wave that's coming, I think this is wave one, this is wave two pullback, and I think we're going to break out of this. And I think the ones with the larger run-ups here are more than likely going to have a big run-up here of what's coming in oil. I think oil is going to do some crazy things here. I mean, just crazy. People will say, I can't believe that a dollar amount can be that amount. It's like, well, if we get into a real tight situation, which I think we will in the 2020s, we're going to see how high oil goes and where that psychological threshold point is where demand pulls back. The question I have is, where is that excess supply going to come from? If we start getting a decline in shale and maybe even a decline in the Middle East, if they kind of decline to some degree, where's that difference going to be made up in the world? If we go down 2 million barrels of oil production at some point, that is a huge, huge decline in the supply of oil, and the price is going to go way up. Um, that's like, and it's going to have really bad ramifications, and it could cause a big crash in the system, which I hate even thinking about it. But the Happy Hawaiian, 83% of homeowners have more than 30% equity in their homes. Only 0.2% of homeowners are underwater on their mortgages. Contrary to popular belief, the run up in home prices has not been a leverage driven speculative mania. I agree. It hasn't. JC says journalists on the TV are telling you that interest rates are going down. The President of the United States is telling you that interest rates are going down. But when you look at the bond market, interest rates are going up. Who do you trust, journalists, presidents, or bonds? I would trust the bond market and that interest rates are going up, and I would trust the charts. Um, just because someone tells me something does not deceive me. It's not like, oh, well, yeah, if the president says it, I just believe they're going to go down. I got to see it. I got to see it. Commodities have broken out of the range here to the upside. Looks very much like an oil chart to me, and like an XOP chart or something. Real estate has bottomed, and now is the time to buy, says Blackstone. Blackstone says time to buy real estate as prices at bottom. Competition to buy discounted assets hasn't been great. Um, Asset managers president sees a wave of buying opportunity in their opinion. Do you believe that? Do you actually believe that real estate is a good time to buy and that we're at a bottom? Put in the comment section what you guys think. I'm curious. Here's the stud. Natural gas legendary wave trend indicator is flashing a rare buy opportunity. Only 4 times in history, it says. When it touched minus 39 zone, nat gas has rallied a minimum of 50 to 110% within next 4 to 5 months. Education on right indicator is important in his opinion. He's talking about this minus 39. We had a couple of areas down here that we hit. The red zone is where he is indicating that we hit this. And I don't know why he didn't put one here, but that was a minus 39. That was way down. We had a big move up, way down, big move up, big move up. And here we are again at minus 39. And we are more than likely going to get a big move up at some point. I agree, but it's going to take some time. Jay Hinster. So this is Fortuna Silver Mines. Break of $4 opens the door to a new high. We had a couple of fly zones. I like how he's got his little bottom pattern here, and we're putting in another bottom here. We're real low, very early in this move for what potentially could be a very big move. Copper surges to 9,000 as bulls see global economy on mend, says Bloomberg. Commodities in first throes of a cyclical upswing. The metal is poised for the biggest weekly gain since January of 2023, and those biggest weekly gains are generally positioning into that commodity. That is what that means. We've got Art Berman. U.S. productivity peaked in 2007. Technology productivity increases, followed peak fossil fuel productivity in 2002. So peak fossil fuel, and there it is, peak fossil fuel productivity in 2002. And the peak was 2007 and everything else. Petroleum coal has kind of declined along with semiconductors and all that. We've come on up here recently in 2020, 2021 on the right-hand side here. Is oil or fossil fuel productivity, is that what's driving all this? Could be. It's just a conversion of energy. All these communications, computers, and semiconductors are all just converting energy to usable things or services. Glue your butt to the seat because you'll need it. Gold Ventures is talking about the potential break here of silver that we're basically turtle heading out of. Uh, and again, guys, silver moves fast. Silver moves fast. This is one to watch. JC Parrott says it's probably just a coincidence, right? And we've got the US dollar, and it looks exactly like the 10-year yield TNX. That's what I've been talking about, how they're correlated. And when you overlay it like this, it looks pretty dang obvious that they look pretty correlated. I said, seriously, what's going on here? Cocoa futures just ripping to the upside, another 8% in a day. I guess they've got some supply problems in cocoa beans, what people have shared. I'm not going to share this one. I don't know if it's 100% right. I'm actually going to unshare it. Gold Ventures, this is Outcrop Silver and Gold Corporation. Um, I'm just stating that there's some similarities between the last big run. Look at the volume before this run here, guys. It's got the green arrow and then the big run. It went from 12 cents to 75 cents in a heartbeat in like basically a few months, 4, 5, 6 months. And we've got that same type of accumulation candlestick that just showed up. So we could see a big move potentially in some of these small silver and gold companies that could be coming here. JC Parrott says it's one of those times where a failed move sparks a very fast move in the opposite direction. I call that the slingshot cheetah. This is the gold bugs index versus the S&P 500. You can see this slingshot where you pull back the slingshot and it slingshots us up to the upside. That is, I think, the case, and we could see a very big move soon in some of these gold bug QE index. So we've got this in terms of the ratio. We've got this big volume that's being accumulated in some of these uh, silver companies and gold companies. We've got a break that's just turtle heading out of silver. I mean, guys, put the data together. It seems pretty obvious to me that we could see a big run in some of these small junior companies and even the producers. They're starting to move. EXK, speaking of EXK, a producer, it's starting to move on up. We could see a big move to the upside here. Tavi says agricultural commodities just surged above Russian invasion levels, reaching near decade highs. This surge is expected to have significant implications for inflation in the global economy, potentially driving food prices substantially higher. Not that we haven't already had that. It's worth noting the strong link between agricultural commodities and the equal weighted commodities index, indicating that other natural resource prices are likely to follow a similar upward trajectory. The war on rising consumer prices is likely far from over, and a potential policy shift by the Fed should only add fuel to the inflation fire. There is a reason why gold recently spiked to record levels, and in my view, this move is just the beginning. So he's talking about the agricultural, this is the Invesco DB Agriculture Fund in the white. You can see it's a new high here. We're breaking on out. And then S&P GSCI equal weight commodity sector starting to turn up too. This here is like fertilizers and stuff I see are just starting to turn on up. So a lot of big opportunities are right ahead of us, in my opinion. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. We do have a 7 a.m. question and answer session that is occurring right now. It's on Saturday, Mountain Time. I release these videos at 7 a.m. So if you're watching it and you want to partake in it, go ahead, go on the website, get onto the Zoom meeting that we've got, and ask questions away. All right, guys, we'll catch you later. This is Finding Value.